On the call this morning, S&P futures rebound up 0.5% on strong earnings from IBM, Wynn Resorts, and Mosaic. Gold remains above the $1,600 level, positive for the 12th straight day, while silver climbs back above $40 an ounce. Bank of America gains over 2% in pre-market trading after beating revenue expectations while meeting EPS estimates. I'm Deborah Borchardt, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Deborah Borchardt, and together we bring you the morning call. Yesterday, Scott, we got off to a bad start. Lots of selling in the morning, but it seemed like the buyers finally came in and started to boost it up in the afternoon.
Yeah, we talked about that last line of defense that the bulls would have to stand. That 61.2% retracement of that July move, and also that lower pivot area that broke to the upside. So I want to show you the area on why we outlined it as a potential dip to buy, which a lot of our traders were looking at. So if you look here in the chart, you will see, back in late June, this is when the market took off. This is when it broke above this lower pivot area. And look at this move, well back to the highs. Since then, it's been trickling down, very frustrating action, very hard to handle. But yesterday, we came in, held the level, came off the lows. That gave some bulls a little confidence to take some stocks overnight, and hopefully some investors said, if I want to wait for a dip to buy, and it's always hard to buy that dip, everyone likes to chase excitement, they got involved a little bit yesterday if they believed that we could move higher going into the end of the third and the fourth quarter.
All right, Scott, we've seen a pattern that we keep having that's repeating. We start out the beginning of the month, peaking, right. Then we sell in the middle of the month, then the buyers go, ooh, good prices, and they bring us back up at the end of the month.
Well, you know what that is? There's a lot of hedge fund managers, a lot of buy-only funds. They get new money at the beginning of the month. They get new money at the beginning of the quarter. So in those first few days, shorts get squeezed, new money goes to work, and then everyone runs out of their stash. And then we just trickle. Volume's been really light, and then at the end of the month, they come back in and protect their positions, and then perhaps get ready to be upticked for new month buying. So it's a pattern, and patterns repeat themselves. So if you actually identify that pattern, you could trade in front of it and make some good money for yourself.
Yeah, we like patterns. Patterns are good because patterns, like you said,